Let me now bring on board a very special guest, Mr. Bhaskar Bhatt, Managing Director of Titan Industries. Of course, Titan is a company which needs no introduction, a Tata Group company. There are marquee investors who invested in this company, and it has been a multi-bagger stock for investors who invested at the right time. Mr. Bhatt, what a delight to have you back on ET now. We certainly missed you on the channel. If I can pick up...
Happy to be back.
If I can really pick up your Q3 numbers for benchmarking purposes, those numbers are not that exciting. I'm sure you're not happy with those numbers. What went wrong for a company which had spoiled market expectations with consistent delivery? Now a bit of volatility has come in.
No, it's primarily on account of the decline in the jewelry business, and you know the jewelry business has been going through significant amount of turmoil on account of regulatory measures, both by the Government of India and the RBI. There was a big surge in demand thanks to the drop in gold price in the first quarter, and it was almost as though consumers had advanced their purchases for the 3 quarters into the first quarter itself. But having said that, the overall slump in demand for consumer conspicuous consumption products has been felt by the company, be it jewelry or watches, less in the eyewear category. In fact, in the eyewear category, we've done extremely well. Therefore, net, if I were to summarize Q3, it was a disappointing festival season, but the neighborhood of the festival season, which is before and after, we are seeing some news, some good news of minor growth. Whether it will sustain, etc., was a question mark at the end of the quarter. It is continuing in January. The sentiment has not fallen below the festive season sentiment, which was quite a low, if you ask me. So I think, while I wouldn't say the market, we have seen the worst, I don't think we are going to see worse times than what we have just been through in the quarter October-December.
While you don't think the situation is going to get worse from here, I think the key concern is how long will it take for a revival? Now many analysts are penciling in Q2 of FY14 to be the time when you will see retail expansion and the low base helping earnings. Do you also, are you also to your mind working with that timeline? How long do we labor through a rather subdued set on the financial performance?
Well, while in general one would agree with the Q2 estimate or opinion, our categories, particularly jewelry and eyewear, have one benefit, which is a very strong and long wedding season that is coming up. In fact, right now we are in the middle of a wedding season, and again April, May, June, it's a very strong wedding season. Now, occasion-led purchases have got less affected than conspicuous consumption driven demand. So it is a conspicuous consumption where impulse purchase, etc., is the driver of demand, particularly if you take watches. So I do see at least those which are benefiting from the wedding season will do better than other categories perhaps. But in general, yes, we do feel that the impulse-led natural demand rise will happen only after 5 or 6 months.
Now, Mr. Bhatt, Titan for the longest time has been a zero debt company, but the norms are changing, the rules of the game are changing. With the new norms, would you be forced to borrow debt? And if yes, will that have impact on your financing cost and aggregate OPMs?
Yes, we have had to borrow because the gold on lease facility has been stopped for domestic manufacturing. Now, however, our business model is not so, it is really for working capital that you need it. A large part of our expansion, store expansion and our entire business model is franchised. So it is an asset-light model. So to the extent that working capital needs to be financed, yes, we need to borrow, but store expansion, etc., is not going to change much. Also, the watch business, watches and accessories business, is a business that generates cash. So how long we will need to borrow is going to be it's not going to be very long that we need to borrow even under the current circumstances. EBIT margins won't drop, it will be PBT which will drop because interest costs have gone up.
You are planning to diversify and you're planning to diversify in the perfume business. I wonder why. Is there a connection between watches, eyewear, perfumes and jewelry?
All luxury brands worldwide are into these categories. Not that we are a luxury company, but these are categories which Indians aspire to own or adorn. And our bet is on the India market. The long-term bet is rising incomes and the middle class wanting to aspire for a better lifestyle. We offer great value for great brands and great design and great store experience. Therefore, Skin, which is what you're talking about, which is the fragrance brand from Titan, is wonderfully well priced, and it's a made in France perfume, very high quality. It has been lapped up. Well, I wouldn't say lapped up. It has been doing well in the market. So we expect to grow this to a significant size. Now, turnover-wise, it may not be such a big turnover, but the numbers. So it is really leveraging on the Titan company consumer base with newer and newer product, bags, helmets, helmets with fast track. It is a youth brand, and youth is what is on two-wheelers today, and it's the right thing to do. We launched helmets too, and that's also doing well. So, in essence, lifestyle, but the categories we enter into, we try to get good value for money for the customer, and with great design, great branding and great store experience.
Mr. Bhatt, I just want to draw your attention back to the jewelry business. Now, earnings have been impacted there due to uncertainty over availability of gold due to high import duty and weak demand. Do you see the regulatory environment becoming better in the coming quarters? What is your outlook as far as the jewelry division is concerned, and your target on market share there?
Well, market share, certainly we are a low market share player, and therefore headroom available is very, very high, and I think we are in the best situation to improve market share because we have brands which are really alluring brands, and we have the network which is far, far bigger than our nearest competitor. Having said that, let's talk about the regulatory environment. I think very rightly, government had to deal with the CAD and had to bring in these restrictions. There has been talk about rolling back some of it. Whether all of it will be rolled back is a question mark, because it is about what does gold do for an ordinary Indian. When it gets converted into a financial instrument, that is the worry of the government, which is not right. But the poor, the common man doesn't have an easily tradable financial instrument, and gold is seen as the best bet for the common man, and it's a traditionally attractive commodity. Therefore, it's a balance. I do feel that the regulation will, there will be rollback, but perhaps not all the way. So we have to manage under those circumstances. For example, today the government is aware, and I guess the market is painfully aware of the fact that domestic prices are between 15 and 17% higher than neighboring markets like Dubai and Singapore. And forget smuggling. There is an attraction for customers even to buy in those markets and bring back gold ornaments, wearing them. and then encash it in India if necessary. So it is semi-hawala, which is not good for the country.
But what has differentiated Titan from other jewelers is that you're high on quality and clear on purity. Does your customer also really get perturbed with what is happening to the gold market, what is happening to the import duty? Is there a correlation? Because you have a high-end consumer who's walking into a Tanishq because of guarantee and better design.
Yes, no doubt, and therefore we have been impacted much less. The actual drop in sales in the rest of the market has been of the order of 30 and 40%. But you know, if we were to look at our consumer, see, price is a very important, the price difference is very important. Now, today, when the price difference is as high as 17 or 18% between the international market and domestic, the decline in demand in Q3 has been primarily a demand decline, not because of regulatory measures, okay? The regulatory measures have curbed the supply chain availability of gold, but we have not been affected. We've been able to buy the gold. However, we've been buying the gold at a premium, and the market is selling at a premium. So Indian price is higher, and that has led to some flight of business, not because we don't have an international presence, to outside the country. How much of the 15.4% decline that we have seen in the jewelry business is on account of regulation and how much is on account of demand slump is very difficult to. But I would attribute at least 1/3 of that to a demand slump itself. Now, we have performed better than the market, and that is the power of the branding and the network that we have. However, that can't overcome overall consumer sentiment, which has been on a general decline in every category. Therefore, the conclusion is, as I said, it's not going to get any worse according to us. When the market gets back, we are in the best position in all our businesses because we have the network in place, we have the brands in place, we have a supply chain and in-house manufacturing facility which can deliver to the increasing demand. Therefore, this is a period we are using to continue to invest in network expansion, category extension. For example, fragrances and helmets were launched in the last year, and these are all bets for the future.
So my question over there, Mr. Bhatt, is then, if you are looking at the timeline to be roughly around Q2 and you're investing in network expansion, how will the numbers look, especially on the market share front in terms of same-store sales for brands like Tanishq and Gold Plus post-second quarter onwards? Because you have stated, and I was reading an HSBC report, that you're looking at doubling your market share in the jewelry business. So while you're preparing yourself right now in this wait period, so to speak, how will things change once things actually start looking up?
Well, we are not looking at any aggressive store expansion, significantly aggressive store expansion, which we were doing 2 years back in any of our businesses, because this is the time to continue to expand, but calibrated expansion. What I mean is, when the market was how it was 2 years back, you could afford to risk, expanding, and then when a store doesn't perform, you close it down. Those investments, the losses of that non-performing store were investments. Today, you're a little more careful. You don't want to waste money taking that risk in a new location and so on. So that is the risk appetite change. However, when you do an evaluation, you continue to explore profitable locations, because in jewelry certainly there are several cities which are not yet served by the brand Tanishq, whereas the desire and awareness for Tanishq is very high in those markets. Watches, it is very different. Watches is well distributed. We have a combination of World of Titan stores, Fast Track stores, Helios stores, and a very strong multi-brand watch outlet distribution, which can reach to the far corners. There it's a question of really getting people into the category, because watches, is is challenged by many other categories, the mobile phone or many other personal wear items. So there it is innovation which is going to. Therefore, store expansion calibrated, but the number of stores that we open, which is anywhere between 100 and 200 in any year, it will happen. It won't be at the 200, 250 level which we were doing a couple of years back. Top line, however, we want to be much more careful because till the regulatory environment settles down in the jewelry business, it is very difficult to predict same store growth because one is the supply of gold itself is a question mark, and then of course, as I told you, those that impact the margin. So it will be a kind of a muted year next year. However, the long-term bets on India holds for us, so we should be able to get growths of 25% back very soon, and that is the belief we have both in the market, the Indian market, and in the company.
I like that answer. So final question. We are focusing on what has not worked for you in Q3. How will things change for you in Q4? If I look at the estimates, you will soon be a $2 billion company. What is your internal turnover target for 2018? So that I get a sense on your top line. You've given me a flavor of your margins. If I get a sense on your top line, I know how much money you will make in 3 years.
Well, we don't make projections for the next year or for the 3 years from now. If we were to take 2018, I have given you a number which is, we should be back on the 20 to 25 growth rate after a year. So that's easy for you to estimate.
Mr. Bhatt, so good to have you back on ET now. Good luck, and I certainly hope to see much more of you going forward.